Howdy, Brian here from quantlabs.net. Today is December 7th. Yabba dabba doo. Let me show you what I've been working on. This is very powerful, I hope. First off, what I'm going to show you is a spreadsheet here. You might have seen this before. And basically, these are the best performing market sectors predefined by how I define it. And these are the monthly returns. These are the categories. So out of these, just to break it all down, we're probably about 5 working days of trading into December. And right now the markets are not looking too good. Let me just show you here. The markets have been pretty well down, waiting for the Fed to see what they come up with in terms of if they're going to continue raising or lowering. But you can see here that there's a lot of red in there, basically meaning that they expect the Fed to continue to raise interest rates, so that will affect everything around there. So everything's severely impacted by that. So here, what I want to show you is these are the best performing subsectors right now. Semiconductors, number one. Number two, we have shorts, real estate, SPACs, overseas, Europe, NASDAQ, biotech, and so on. And basically, some of these and a lot of these are going to be ETFs with bearish expectation and bearish sometimes or shorting with leverage. So these are not the best ETFs to buy because they can quickly turn against you. And if you're not watching it actively, you're going to high probability you lose money. I prefer the longing kind of trending uh, sort of stocks. Now, what I'm going to now show you is some of these will contain an ETF, some of them will contain the holdings of high performing ETFs, and about 90% of, I'd say even higher now with the latest market conditions, a good chunk of the ETFs are not profitable. And as a result, those holdings are not profitable. And then out of that, the ones that are profitable, probably a good half or maybe higher, will be just swaps and treasury bills as part of the mix to boost the performance of that ETF. I'm not a fan of that, but some of those exist. So here's my latest report I can show. Here's the actual mix. So what happens is it's gone through probably about 15 ETFs that were proven out of that, what I just showed you. Out of that, it'll go through, now this is a brand new script I just wrote. From there, it'll go through those 15 ETFs and it'll only pull out US holdings, US stocks, nothing, no foreign, US stocks that are somewhat performing and or about to perform. And that's the test that I'm under. So we have here 5 different stocks, US based, and I should say equity. Anyways, these are the performance. It's not too good. See here, this is the S&P. This is the current performance. Now, you may go, why would I go with that? Well, let me show you what this script does beyond this. Now, if you are familiar with my Seeking Alpha articles, they come from those reports come from the same source with what I'm about to show you. But those Seeking Alpha articles only show a condensed version of what I can, in a simple way, be able to submit to Seeking Alpha, and then will get approved for publication. So these particular Word documents are the complete analysis, be it fundamental, be it technical analysis, be it AI, and there's more to it. So let me show you why I think this is an important element. So I'm going to pull up so here's the weightings of each holding in this potential portfolio. Regardless of the past performance is not very good, but what I want to show you is that this process may work based upon what I'm about to show you. So I'll go with the biggest weighting, which is MOH. Now, you might be asking, what are these companies? So let's look at the first one. So this is Molina Healthcare. So this is going to be a combination of semiconductor, health, and biotech. So this is Molina. You can see when we had a down day, it's up 1%, 5 day looking good there. 1 month, it's not too bad considering this whole week has been a wipeout. And so the question is, will this continue? And that's what these Word documents are for. So the first one here is the raw one that would be for Seeking Alpha, but I'm not going to provide that. So there's all the fundamental, and these are all built around different sources. So in here we've got, if you want to go crazy, you go crazy. Here's the ratios. So you can see here the current ratio. It's mixed since 2017. Same with a quick ratio, but that's not what I look for at the top end of everything. What we're looking for are two things when it comes to fundamentals. This is in the data table. So you can see here it's Molina Healthcare. This is what I'm looking for right here. Is the SMA, simple moving average. We got here the 20 is 4.63, so it's pretty good. And the SMA 200, 5.93. And for the last 50 days, working days, it's been just slightly negative. So that's number one. The other thing I look for is the, let me see if I can find it, enterprise, which is basic, or estimation, which is the forward guidance. So right here is the forward guidance. So this is for the next 4 years in this case. Depending upon the company and how confident they are with their guidance, they may go out 5 years, 6 years. I've seen this as long as 7 years, based upon their confidence. So this is directly from the company when they do their quarterly reports. So the revenue is very small, but it's about just over 10%, 34, yeah, maybe 20% growth over the next 4 years. And the other thing you probably want to know about is EBITDA. So that's growing. There's a lot of companies out there like Energy that are kind of like, here, this year's the peak, and we're going to wind it down because what we produce is not going to be in demand anymore. And that's pretty typical of companies like oil companies like Exxon, or just some mining companies. They know their time is up. So this is it looks like a growing company, which is good. Not very aggressive. The other thing that you can know how you're doing is typically with Seeking Alpha, I cannot go less than intraday. So I can't do intraday. So you can see here very strong buys here. Not strong buys, but when you get into the intraday, you can see it's all buy with one strong buy. Intraday can radically change, but the thing is, this is important to know, is like if you're going to put money down and buy stock today, the expectation of the price should go up as well, based upon what I'm showing you right now. And this is for MOH. So here's an example, the price of the Fibonacci. You can see here, that's the general trend since 2019 on the stock price. So it has peaked here roughly maybe a month ago. Most people would wait it out until it crosses that trend line. But in this case, I don't see the point. The reason is because it looks like there's a lot of momentum in this stock, and I'd get in now. So that's probably why this thing got flagged. So this is a good winner. So right now it's at 300, 350. Okay, that's on the price. So again, the RSI is important. So just above 50 by the looks of it. It's got some room to grow before the next pullback, so you could probably get some nice return there. These are the other important things, is the AI, the Monte Carlo. So you can see here the higher prediction paths, the predicted paths, and then the same thing with the normalized distribution. There just seems to be more buckets on the right side of the last price here. And these are the sort of things I like to see is these fat tails on the right side, which pretty good for expectation. Now, here's the funny thing: the regression. We're saying this is a 30-day regression here. So over the next 30 days, it's expected to go flat maybe in the next 2 weeks, and then may start to take off in the next 2 weeks after the 30 days. So just something to be aware of. Now, this is the interesting thing that I've seen across the board with all these five stocks. Look at that trading volume. Okay, that's buying trading volume. So somebody's loading up on this stock, and then you can see here it's dropped. But now the question is, are they expecting shorting as well? And that's in red here. But you can see here it's more overwhelming in blue here for the total trading volume. All right, so and then the volume drops. So this is bizarre because look at what's happening here. When you get people loading up on the total volume, that's a big spike. And look what happened. The price did go up. Same thing here with the volume did spike, and it's just trending up now. So that might be another way to confirm this this stock may be ready to go up. All right, so I'm just saying. This can be helpful too on the insider. Now, in these reports, I did not put the sustainability because people on Seeking Alpha didn't like it. I don't need to put it in there. I just put it as an extra metric. But in this case, I didn't put it in there and whatnot. So in here, we have the insider stat of who's buying what. So the last load up was a sale from these executives. Okay. And same thing here, they're selling. So it's mixed, but somebody's loading up on this stock, and that's pretty well it for that stock. So again, let me just go through this and load up my next one. Now, this really, like I said, originally it will go through and pull out 900 stocks that could be potential movers. From what I'm seeing, these are the potential movers. So the next one we have here is MOH, and then let's look at the SAR. Okay, SAR. So let me look up what that is. Okay, so what stock is this? Saratoga Investment. So again, we had a fairly flat market today. It's up 4.8%. Not bad. Five. Look at that big rise there. That big swing. Now, here's the hard part. Will it continue to move up in price? Here's the monthly, and the monthly probably says yes. So this could be another winner, Saratoga Investment Corp, SAR. So let's take a look at this at a deeper level from the style of my Seeking Alpha articles. Okay. All right. So again, I mean, all the data is there if you want it. So this is a financial services company based out of New York. All that information there. Very useful if you want it. Here's all the different ratios. And again, you want to see what's been going on in the past. Look at this. This has been doing really good. It's been growing from 2018, 87. So it's had a really back and forth year. So maybe next year in 2023, we could have a very strong year for this based upon, oh, I'm sorry, where's our ratios? We have a lot here. I'm not sure if I'm finding what I'm needing. Yeah, wrong piece of data here. Growth. Okay, here we go. So you can see here, 2018, 0.3, 0.1, and then it really took off. 1.5 to 2021, negative half, and then this year's been pretty strong. So we may be on benefit of that. Network growth, very strong year this year. So let's take a look here at other kind of metrics. And again, this is all data driven. This is not me guessing what could be. This is what I've got a script that will analyze, and based upon this, it'll pull out all the best stocks out of the top five, top performers. So in my case, I wanted to know what are the best stocks that are giving at least 4% for the year. So we're already 1 week into December, and you can see here we're already up 12% for this market subcategory. So I'll get into that in a minute. That's for semiconductors. So let's continue along. There's just so much information here. This is why I charge now top dollar. So the SMA, very strong here. 200, 7.8 for the 200. 50 at 16%. That's pretty strong. At 20, that's not bad as well. So that's pretty good for the last month. And enterprise due diligence. Now you might go, what does this mean? There's not a lot of people watching this stock because it's small. So it's a $25 stock. And these are the expectations people have set as targets. And looks like it's kind of getting there on the last target. Estimates. Now, this is important information. So you can see here, this company is fairly conservative on the 2025 4 years. Revenue, currently, this year is 69. So they're already figuring they might grow another roughly, 25%? 25% for next year, and then even grow even more next year. So this is a good, strong momentum. And again, this is from the company. I'm not making this stuff up. So they got a pretty good dividend. Wow. Now, okay, so Saratoga, if you're going to get that kind of performance, but at the same time, 7-8%, that's a pretty strong dividend. So this is a good winner, even from a dividend point of view. Looks like the EPS is growing as well. So you're getting double whammy in benefits. You're getting a stronger stock, plus you're getting a growing dividend. Oh yeah, okay, so you see the value here. But there's still some blanks here. I'm not sure why they would not offer this, but whatever. That's how they put it out there. That's fine for them. Their EPS is not bad. Okay, here we go. So again, here we're dealing with a pretty strong company with good momentum. Even on a day or month, you're doing with a buy, and even on the intraday, it's pretty good recommendation. And again, that's coming from TradingView. So that's coming from TradingView analysts that cover this stock. Now this is looking pretty decent. Now I see these all the time on these type of price charts. So you got the momentum here, and that is up until September of last year. So normally what would happen is you'd see some really good momentum in any stock out there, and then the price collapses for this year and then start and recover. I would say up until last week, but with the market the way it's been going for the last week, it's been pretty shaky, and actually it's more down than up. In this case, with this stock, it's done pretty good. It's only lost maybe, if it's high as at roughly 25 plus, and it's only dipped down to just over 20. It's only down 10%. That's pretty strong, and it's almost fully recovered to its full price. So this could be another stock that may be worthwhile to put into. Again, we're seeing the same thing on the Bollinger. The MAC is looking pretty good. The MACD. This is where I start to get worried. Will it pull back? And it could. But it looks like there's a lot of momentum in this particular stock. So again, how do you know on the RSI? It's always when you hit that 70, 80 on the overbought on the RSI. So you can see here we're already kind of there, but it's already pulled back. So it might start to continue to move up. Now with the AI on the Monte Carlo, lots of upward predictive moves. Again, this is looking really good. Here's our current last price. On this side, we're getting on the normalized distribution a higher concentration of higher price expectation, but it's this that really looks good. The more of these, the better. That means that's on the extreme or the fat tail on the right side. So that looks a-okay. Okay. Now again, this is all pure data. I'm not trying to be an analyst. I'm just trying to interpret and express what this data is trying to tell you. So here's what's going on with the regression. 30-day step, 30-day prediction. As you can see here, the price may flatline and drop a little bit, and then it may continue to move up based upon a couple of things already shown you. Estimates is the number one. We've already looked at the SMA, simple moving average, which has got some pretty decent momentum for the last 50 days, let's say. So that's pretty good. So that may start to build out. All right. So again, on the shorting side, this is wow. That's looking good. So remember what I said about companies that are loading up here? You can see they loaded up here and drove up the price. Again, it did dip. Oh, sorry. This is the volume. More volume did pick up, and we got another spike here. So there may be more trades to come in and start to boost up that price. Because not a lot of people are going to know about this stock. It's not like you go on Bloomberg and they'll be rattling on about this company day and night, right? So, but the nice thing I like to see is the dropping short volume against the total traded volume. So that's encouraging to see. Now, again, this helps. So latest activity here is not a lot. So here we have August. Okay, so somebody bought it then. Let's see what else we've got. So this goes all the way back to 2020 and October. So people are selling. I can't explain that, but from my perspective, this looks pretty good. All right, let's take a look at the third company. So the third company we got here is, yeah, it's in here. So the third company we're looking at here is, let's say, this one right here, PPC. Let's look at what PPC is. So PPC, Pilgrim's Pride Corporation. Pilgrim's Pride Corporation. I'm not sure what that is. Okay, so you can see the news here. Pilgrim's Pride up 12.7%. That's why I like Yahoo, because it's all condensed. So again, this is from Zacks. Recent positive trend or is due for a pullback. We can confirm that through the data we're about to look at. So Pilgrim's Pride beat, sales improve year over year. Okay, benefit from long-term investments like automation and focus on key customers. All that fun stuff. All right, so looks like they're a food processor. The producer, marketer, distribution of fresh, frozen, and value-added chicken and pork products. So this is a food company. All right. Now let's go into our all right. Looks like I'm taxing my system pretty good. All righty. Boom. Okay, so we want here. Okay, so this is what we want was PPC. All right, so here in this company is what we're looking at. Again, all this stuff, it's there if you want it. All the info, Pilgrims, Greeley, there's the address. All right. So here we have our ratios. It's a conservative company. It's been declining. Most of the time, that never really means a lot. But again, people want to see that, especially in the higher end of investment. So we cater to that. Here's the revenue growth. So it looks like it's been declining. We're 17 has been its highest and it's been declining. But coming out of that pandemic, there it's not too bad. It's kind of recovering. Continuing along, this is very exciting. So, okay, so now what I'm going to look at is, again, I like to look at high level right here. All right, so this is what we're looking at here. So we've had a negative SMA 200, uh, not the strongest 50-day SMA, and then we just slightly negative for the last 20 days. So let's see what's going on. So obviously, stock price is important, so it's declined a little bit. Actually, it went 29 to 20 in 2020, and then it's nicely recovered in 2021 at $27. Uh, all right, so here we go. So this is the target. So the price is around 25 right now. So this is looking pretty good. Again, these are probably considered low float companies, so there's not a lot of analysts watching this, but it's done pretty good. You can see that the target's been set pretty close, and the company's not that far off of them. That's rare. So here's our estimate. So it's very flat based upon that revenue over the next 3 years. Yeah, you can see the EPS has dropped. There's no dividend, it looks like. Okay, here's the technical analysis. This is interesting. So you can see here for the monthly, weekly, daily, we've got buys. Okay, so this is probably why Seeking Alpha doesn't want to include the intraday because there's noise. And only if you're watching this on a daily basis, intraday trading, you'll get caught up in here and you'll get spooked. So here's the Fibonacci line. That's a trend line. As I said, it has dropped from 35 down to 22. So it's dropped quite a bit, about a third. It's not an exciting company. The time to have put money into it was in the last little bit there. But the RSI says a lot. So we're down to, I'm going to guess, around 50. So that's not a problem. When it's in a downswing, that's what we got to kind of worry about. So here is where we kind of will try to project things. The Monte Carlo is saying that there's not convincingly, but there are higher predictive paths. On top of that, there are higher concentration of higher probability of the price to decline a bit, but there's more potential of it to go up in price. Here is the interesting part, what the regression says. So you can see it's declining. So this is the company that doesn't really excite me like the other two. You can see here the 25, but again, it's this trend. I'm always seeing this loading up. People are doing something, and what they're doing here is when you look at, here's the total volume, and in red there, that's when people are, out of those traders, this is the percentage that are predicting it'll short. So as people load up with this higher volume, what they're doing is that they're actually loading up with the anticipation of the price to go up. So this could be an interesting one to follow. And again, on the insider stats and what the executives, you can see here the last activity here was for August. Here, where are we? Well, it's quite a bit, but there's been not much activity there, so there's not much to tell out of that. All right, so that's all fine and good. Hopefully, you can see the value of this. This is very powerful. So you got 5 companies to go through. So let's go through our next company here. So we got PPC, and then we got CPLP. Let's see that one. CPLP, this one right here. All right, so this one, well, let's see what's going on in the world of CPLP. CPLP, Canada Products Partners, Canada Capital Product Partners. So that's up 0.7%, 5-day, still profitable, and it's in a decline. It looks like. So let's see what's going on. Capital pronounces third quarter results. Okay. Let's see. More. So they're in marine shipping. They're based out of Greece, but they're listed on the U.S. markets. So very interesting. This could be a shipping company. I don't know anything beyond that. Periods, yeah, it's declined, but last 2020 looked pretty good. Let's see here. Continuing along here with growth. Yeah. So the last 5 years, last year was its strongest. Prior year was good. So this is one of those pandemic companies. Yeah, you can see there the gross profit growth is fairly strong, the strongest in the last 5 years. So that's good. EBITDA, yeah, strongest in the last 5 years. So you can see the importance of these tables on the fundamental side. Operating growth has been very strong, so I can see why this is being picked. So that's all good on the fundamental side. With the data, let's see how it's been doing on the SMA. So here, not good, all negative. Let's see here. So we want to see the estimate. Okay, so here's the estimate. That's looking pretty good. So 284, they're expecting. So again, we're seeing some growth here. We're seeing some growth in the dividend over the next 2 years. Profit, but that should positively affect the stock price. Again, not one of my favorites, but let's go here. I believe this is the due diligence. That's the targets. Again, same story as before. Not a lot of analysts are setting targets on this one. But looking at this price, it has not collapsed either. So it's held its own with that nice floor there. Okay, so this is another big one. Again, TradingView on the recommendations, all selling and selling strong. So maybe you take heed on that. So where's our MACD? It's been fairly flat. RSI is down. Yeah. Doesn't excite me. This is not compelling me to buy, but this does. On the normalized distribution, that's not bad. Where you get more on the right side. Here, it's just going to stay flat. So maybe this might not be a great stock to buy. Shorting volume, again, there's none of this big volume. So this is a weaker one. And there's no insider activity. All right, so we're going to do one more. And we've got one more to do, and I think that's USD. Okay, so this is USD. Okay. Let me pull that up. Okay, I'm going to close this to free up some memory here. All right, so what is USD? So this is the big one. This is the semiconductors, if you remember. Our best performing was semiconductors. So it's taking an ETF now. Okay, so how's our ETF been doing? So this is the ProShares Ultra Semiconductor. 1 day up slightly, not looking good there. 1 month been fairly flat. Let's see what it says in the Word document. Now remember, this is an ETF. This is not a stock. So we're looking right here for our stock ETF. This is a semiconductor ETF. All right. So let's see here. So here you go. Here's all the holdings right here. Um, so all the swaps, but I did see Nvidia, Intel, Broadcom, um, Texas Instruments. Very interesting. So interesting things there. Okay, data. This is where it gets interesting. So here we've had a very negative year. 50-day, we're at 13%, and then for the last 20 days, we're at 2.7 in the hole. Fibonacci, look at that big decline there. Semiconductor, they're spending billions of dollars to build out semiconductors. There's the Intel announcement for Ohio. There was just one, I think, 2 days ago that Apple's part of with TSMC in Arizona. I think it was a $20 billion investment. So they're putting money in here. So, I mean, this might be something to really look into. I did do an article on Intel on Seeking Alpha. Easily my most popular article with over 8,000 views, something like 80 plus comments on it. And I can see the overall space of semiconductors, be it TSMC, be it Intel or AMD and NVIDIA. They are on a recovery. I will tell you, out of all of those, NVIDIA looked really probably the strongest, as well as another company I saw out of Arizona. It's a smaller one, ON, and that had a really nice trajectory in its price. So I think that one will do well. That's a semiconductor as well. It's a smaller one. So here we go with the AI for Monte Carlo. You can see how all those predictive paths, pretty convincing that that's looking pretty strong. Plus here on the higher expectation on the normalized distribution again with that right tail there, the fat tail. Here it's saying it's going to be kind of flat with the regression. And again, there's no crazy trading volume here as well. So it's an interesting ETF to buy into, maybe. No insider stats, well, because it's an ETF. So that's that. Pretty interesting stuff. So it looks like timing wise, you got about 3 winners there. One that's been doing fairly well. Now, if you like this, join the email group at quantlabs.net/books there. Get on the email list if you like this, because this is really important. Now, here's the thing. I've been trying to do crypto. It's been flat at best. It's not easy. Even though going after with automation on altcoins, I'm not going to give up, but I do think that it is a challenge in crypto. Forex, the returns are fairly small. If the markets are going to continue to do what they're doing right now with more ETFs pointing like bearish and shorting ETFs are pointing up, which meaning people and especially institutions with their investment management and advisors that are selecting the holdings for those ETFs, and they're pointing that, and you're getting performance out of shorting ETFs. There was like commodity gold for some of the miners as well. This could be as well. Just the REITs might be short REITs because that was a trend up until August. So things may be kind of moving down outside of the stocks that I've shown you that have pretty good momentum. And when that happens, when you have equities pointing down or it's a shorting, that's going to profit. What I'm finding it's better at that time to go into currencies because there are some currencies that are doing fairly well. I mean, that may come to an end, but for now, that's what I'm seeing. And there's better ways to trade gold if that's your worry, but you can do that through crypto of all things. PaxG is what you want to look into. And that's pretty well it for now. And now you can see why um, I do charge what I charge, because my next ability, I can have this strip generate a lot more stocks looking for winners by going through this and taking a look at each one and say, okay, I like that, I like that, I like that, based upon its fundamentals or its technicals or its AI results. On top of the other things that I've got, including insider activity on the executives, what they're doing, as well as trading. I can go way deeper than that nobody else can do, really. So, as it stands, that's why I'm charging big money. But if you want to know more, just join the email list. You'll get my server, chat server, and all that uh, links as well. That's pretty well it. Another long video. Sorry to bore you, but thanks for watching. And we shall talk to you soon. Have a good day.